Welcome everyone, and thank you for joining us for the annual meeting for members of Club Plus Super. I'm Janet Tawney, Chair of Club Plus, and I'll be hosting the meeting today. Before we commence the meeting, I'd like to acknowledge the Gadigal people of the Eora Nation, who are the traditional custodians of the land here in Sydney. I also acknowledge the traditional custodians of the locations that we are streaming to and recognise their continued connection to country. I pay my respects to their elders, past, present and emerging. In opening, I'd like to introduce you to a number of the key people of Club Plus Super, the trustee with overall responsibility for your super fund. They lead the team who work tirelessly for the benefit of you, our members, so that we can help you achieve your retirement on your terms. First, to my fellow directors on the Club Plus Super Board, Steve Wan is our Deputy Chairman. Our directors are Jing Min Quinn, John Hawker, Julie Kalevska, Keith Gomes, Nick Lucinelli and Wayne Krell. Second, to our executive team led by CEO Stefan Strano, who has responsibility for overseeing and coordinating all the operations of Club Plus Super. Stefan is ably supported by Carolyn Tate, Head of Member Experience, Craig O'Loughlin, Head of Partnership and Growth, David Barton, Chief Operating Officer, Gemma Dooley, Chief Investment Officer and Lindy Hunt, Head of Risk and Compliance. Third is our auditor, Marie Polisco from Ernst & Young. We are pleased to be able to conduct this year's meeting virtually via webcast, given the restrictions in place as a result of the COVID-19 pandemic. Otherwise, we would have enjoyed meeting you in person. This member meeting is exactly that, a meeting for you, our members. As well as hearing from myself and some of our key leaders about the fund itself and the external investment environment, this is an opportunity for you to ask questions. While our comments are pre-recorded, the question time which will follow will be live. We look forward to answering any questions or hearing any of your suggestions. We trust that you are able to see and hear us and to interact using the technology to ask questions. Questions may be asked at any time during today's meeting by using the question and answer function. We will seek to answer all questions asked of us today. The only questions that we will not be able to answer are those that pertain to your certain circumstances, such as questions about your insurance or account. In these circumstances, our team will follow up with you directly after the meeting to address your question. We remind you that you can contact us via email or phone, and we can connect you to an advisor, or you can complete the form on the website. I also note that we will not be filtering any questions asked, with each question being presented verbatim. Answers to questions asked in this meeting will be included in the minutes of today's meeting, which will be made available on our website within 30 days of the meeting. I would like to remind you that the information provided at today's meeting is for general use only and does not take into account your personal circumstances or needs. So, to the order of business today, I will present the Chair's address. This will be followed by Stefan Strano, our CEO, who will speak about the challenges throughout the year that was, including COVID-19, how it impacted our members, and what we are doing to further support you in the years ahead. And then Gemma Dooley, our Chief Investment Officer, will provide an update on the investment performance and investment outlook for our fund. We will then open the meeting to your questions. Our board members, senior leaders, and our auditor are all available to respond. So it now gives me great pleasure to present the Chair's address. 2020 was a very tough year. We want to take this opportunity to say thank you to all our members for your trust and continued support over this year. I also want to acknowledge and thank those who helped support so many of us through a year of bushfire, drought, floods, and a global pandemic. To all of our members working in clubs, and that's about half of our member base, thank you for for being the helpers on the ground for clubs, leading the charge in their communities during these difficult times. During the bushfires and floods, many local clubs became the source of food, water and shelter in their communities. During the pandemic, many of them continued that support, often on wheels, in masks and at a social distance. And to the many of our members who no longer work in the club industry, working in areas such as healthcare, emergency services, retail and hospitality. Thank you all for masking up and being at the forefront in these extreme times. Everyone played their part and we appreciate it. At Club Plus Super, we know how privileged we are to be entrusted with the oversight of your superannuation and ultimately your retirement goals. We take this responsibility very seriously. We know that trust needs to be earned every day. Our commitment to earning your trust drives all of our actions. This has never been more relevant as we continue to support you through this time of great change and challenge. Given this is in our inaugural members meeting, I would like to take the opportunity to explain a bit about our structure and how the team works together to deliver the best possible outcomes for you. As trustee, Club Plus Super is regulated by APRA and has the overall responsibility for fund members, always acting in their best interest. We operate under a two-tiered governance structure, a governing tier with the board and its committees, and an operating tier comprising our experienced and expert staff and a number of external service providers. These teams work together very closely. We believe a strong governance structure enables both robust and flexible decision making, and no year has demonstrated that better than the last. Club Plus Super is a very well-run, highly regarded superannuation fund, focused on delivering exceptional service and outcomes to our members. We are very proud to again be awarded a platinum rating as a best value for money super fund by Super Ratings, an independent rating agency. 2021 is our 11th consecutive year as a platinum rated fund. Super Ratings considers 4 factors in determining the best value super fund across the board. These are competitive investment performance, comprehensive insurance cover, helpful member education and services, and robust administration and governance. If I now look to investments, most of our members have their super in the MySuper Balanced Fund investment option. I would like to share 2 things about the investment performance of this option. First, Club Plus Super continues to outperform our investment return objective over the long term, which is 10 years or more, in order to help our members retire on their own terms. And second, in comparison to other super funds, Super Ratings data shows that we are well above the industry average for comparable investment options. While we hope you are pleased with our long-term investment performance, rest assured we are constantly striving to do better for you in this and every area of our fund's operations. We can't talk about 2020 without noting the array of significant government-mandated changes to superannuation. These included the early release scheme, which allowed members to access up to $20,000 of their superannuation, protecting your super, putting members' interests first, and most recently, your future, your super. All legislation is targeted at ensuring the interests of you, our members, are always foremost in all our considerations and decisions. This has always been the case at Club Plus Super. While Stefan will speak to you shortly about how we have responded to these changes, I would like to stress that these are not the only developments in your fund in recent times. In this incredible time of change, it has been valuable to be able to remain steadfast to a clear vision, and strategy for our fund to anchor all of our decision making. While our vision is to become a bigger and growing fund, we are determined to do this while retaining the trust and respect of our members. Our ambition is to be in a belief that scale brings opportunity to deliver more to you. But that should never come at the cost of losing the ability to provide high quality, meaningful, personal service. Our strategy is to maximise existing relationships with our members and employers, extend from those relationships and pursue opportunities to grow the fund. In order to achieve this strategy, we have taken steps over the past few years to strengthen the fund's strategic planning, governance and risk management frameworks to ensure that we are a sustainable fund that continues to deliver the greatest possible member outcomes for you now as well as into the future. As we continue to grow and evolve, we have increasingly moved to directly employ people in our team who have the greatest direct engagement with our members, as well as the technical capability to ensure our product and service is as strong as possible. This has seen the ongoing development of our member experience, employer and business operations teams. By drawing on some of the leading external providers in the industry across investment management, asset consulting, administration, insurance and custody, we are able to leverage the latest technology and expertise across global capabilities while also having the flexibility to choose what we believe is best for our members. We believe that working more closely with our members and putting their best interests at the centre of our strategy will strengthen our fund as members become more financially prepared for their future. This year, along with this annual member meeting, we'll also be publishing our member outcomes assessment. This goes on our website and is a holistic assessment of our performance across all areas of our business. Look out for the member outcome assessment for 2021 on our website by the end of March 2021. In summary, although there has been a vast amount of change this year, it positioned us strongly for something we could not have anticipated: the focus, agility, resilience and care required to respond to the extraordinary events brought about by COVID-19. Our strategy will continue to evolve over time to ensure we are delivering retirement outcomes for you, our members, that are best practice, cost-effective and fit for the future. I would now like to welcome Stefan Strano, Chief Executive of Club Plus Super, who will provide greater insight into the operation of your fund.
Thank you, Janet. Good morning, everyone. For many years, the superannuation industry has encouraged members to be more engaged with their super. Well, in 2020, that certainly happened. What began as volatile investment markets and concern over a health crisis quickly turned into a global pandemic that drove city lockdowns, business shutdowns, job losses and stand-downs. As a result, many of you reached out to check your investments, understand your insurance, and in some instances, access super early. This incredibly challenging time meant our role was more important than ever before. Immediately following the announcement from the World Health Organization, which declared COVID-19 a pandemic, we implemented our pandemic crisis plan and moved our teams to remote-based working. At the same time, we set up frequent communication with all our major service providers and stakeholders. This activity ranged from redirecting our teams from their typical day jobs, finding new ways to support our members online, to establishing a daily investment positioning and liquidity management plan with our asset consultant. These measures ensured we were able to meet any cash payment requirements for our members, as well as continue to invest your money according to our investment strategy. The combination of strong decision-making frameworks, a highly motivated team, and the ability to leverage leading providers in the market allowed us to be there for our members when it mattered most. In many ways, the events of last year created the opportunity for new initiatives, and we really progressed our digital capability. Importantly, while the virus meant that social distancing kept us apart physically, in many ways, through better use of technology, we've become more connected than ever before. Luckily, at the start of 2020, we were already working on several initiatives which allowed us to continue to support you when the pandemic hit. We introduced regular e-newsletters, leading with investment updates and any news about government changes to super, to help you stay informed and remind you we were there to help. Our member services team pivoted quickly from visiting clubs and members in person to running online webinars when we went into lockdown and when so many people were stood down from their job. The early release of super measures which came in last year gave members who were financially affected by the pandemic access to as much as $20,000 of their super. In total, Club Plus Super paid out $155 million in early release payments. I'm pleased to say that due to the hard work of our investments and operation teams and the wonderful work from our administrator, the Link Group, 98% of those payments were made within 5 business days. We also supported members and their loved ones impacted by illness or accident in 2020, with nearly $14 million in insurance payouts. That was an overall claim approval rate of 95% of claims lodged. While insurance can be extremely valuable for some of our members, we also recognise that not all of you want cover through super. With the government's recent changes called Putting Members' Interests First, members under age 25 or with a super account balance below $6,000 are not automatically placed by default into insurance on joining the fund until certain eligibility criteria is met. You'll have received a number of communications from us about these changes and what they mean to you, but please contact us if you're unsure if you're covered or what level of cover you currently have. We measure our success by how well we deliver what you need when you need it. So did the efforts to support you last year actually help? Well, as many of you know, Club Plus Super conducts annual member satisfaction research with independent research firm Ardea. We've been running this research since 2008 to track how we're doing in terms of meeting and hopefully exceeding your expectations. This year, nearly 3 times as many of you participated in that research. Thank you so much to all of you who took the time. I'm proud to share the results of this survey. Overall satisfaction with Club Plus Super rose to 88% for 2020. That's the highest ever on record and well above the industry average of 75%. I can tell you our team took great pride in receiving these results at the end of last year. We don't rest on these results though. Through such a difficult year, we feel that we became closer to our members than ever before. This made us even more aware of how important our role is in helping you navigate all the changes happening to super so you can be more confident in your path ahead and retire on your own terms when that time comes. We have a lot more work to do in 2021 and we're committed to doing our best to deliver great investment outcomes and support for all of you, the people our fund was established for and exists for, our members.
Thanks, Stefan. Club Plus Super couldn't be in better hands. I would now like to welcome Gemma Dooley, our Chief Investment Officer, who will talk to us about investment performance both for the financial year 2020 and since then. To deliver robust investment returns for our members, our investment team works closely with our asset consultant Jana, as well as with a panel of best-of-breed investment managers. The investment expertise and experience that underpins your investment returns is reflected in the independent awards and the contribution of competitive long-term investment performance to our overall fund platinum rating from Super Ratings. Gemma, over to you.
Thank you, Janet, and good morning, everyone. Well, it certainly has been a crazy ride in investment markets and for the investment teams of super funds over the last 12 months. It's become a cliche to say that 2020 has been unprecedented, but it really was in terms of the forces influencing the global economy and the challenges facing super funds. We started 2020 with global investment markets shaken to their core as COVID-19 swept the world, forcing mass lockdowns. We finished the year with the most bizarre US presidential election and aftermath that we have ever seen. And in between, trade tensions between the US and China and ongoing Brexit negotiations weighed on global markets. Domestically, here in Australia, we also face the economic and human impacts of drought, devastating floods and bushfires. On the positive front, record stimulus packages introduced by governments around the world in the form of extraordinary fiscal and monetary support cushion the impact of massive global lockdown measures caused by COVID-19. In addition, Australian super funds face the added challenge of managing the unparalleled early release of super scheme. This government initiative allowed super fund members financially impacted by the pandemic to draw on their super accounts like never before. In terms of the financial year ending June 2020, let's recap by taking a look at the extract from the June investment update video we shared in the quarterly e-newsletter to members in August. The full video and the accompanying blog, for those who would rather read about it, can be found on our website under the News and Insight section. Welcome to our investment update for the end of the financial year. And wow, what a year it's been. To say we've had a bit of everything in the last 12 months is an understatement. Let's look at the year in two halves. The first half, the period from July 2019 into early this year, saw strong returns from global share markets and other growth assets, spurred on by central banks cutting rates to help avoid a recession and a break in trade tensions between the US and China. US shares were up over 10%, while in Australia, devastating drought and bushfires weighed on the markets in December, and our share market delivered a more subdued return of 3.3% for the 6-month period. In this environment, our MySuper option was up 3.5% for the first half of the financial year, a strong half-year result. The second half of the year started well for global markets, with some reaching all-time highs in February. But this started to unravel when the coronavirus that started as a problem in China in January spread quickly around the world and the death toll rose dramatically. The widespread lockdown of countries put in place to try and contain the pandemic has had huge social and economic impacts. From the March lows, global shares rose 40%, domestic shares rose 35%, and commodity prices and the Australian dollar also rebounded. But this was not enough to claw back the losses made in March. As a result, for the second half of the financial year, US shares were down 3% and the Australian share market lost 10%. In this environment, our MySuper option was down 4.4% for this period, diversification protecting it from the extremes of the market crash. As you can see, the year was made up of two very different halves. Over the full year, the MySuper option had a small negative return of -1%. While we never like to deliver a negative return to members, we think this is a solid result given the wild ride in markets caused by the impacts of the unprecedented global pandemic that we're all living through. To put this return into perspective, during the global financial crisis in 2008 and 2009, the financial year return for the median MySuper option was -12%. Now that was pretty ugly. Remember, super is a long-term investment, so financial year returns by themselves are fairly irrelevant in the big picture. Importantly, the long-term returns of our MySuper option remain strong, with the 10-year period ending the financial year returning 7.2% per annum. As always, if you have any questions about your super, don't hesitate to contact one of our team. There are things you can do right now to try and bridge the investment impact of COVID on your super balance. It was great to film that update at the Norths Club at Camaray and to chat with some of our members while we were there. Anyway, the end of the financial year seems a long time ago now, so what has happened in the last 6 months of 2020? In a nutshell, the fastest recovery from a market crash of 30% or more has continued. In August 2020, the S&P 500 index, which tracks the US equity share market, climbed to a new pre-COVID record, surpassing the previous record hit in February 2020. The Australian share market is also not far off its all-time high. In comparison, after the global financial crisis of 2008, it took almost 2 years for markets to return to previous highs. The records continued in November as markets surged. The Australian share market delivered 10.2% in November alone, its largest monthly gain since 1988. In terms of our member investment options, they have benefited from these strong investment markets over the last 6 months. Our MySuper option, which approximately 80% of our members' assets are in, returned 8.1% over this period, erasing the negative 1-year return for the financial year ending June 2020, and delivering a 1-year return for the 2020 calendar year of 3.4%. Now, you've heard me say it before and you'll continue to hear me say it. It is important to remember that super is a marathon, not a sprint. Long-term results are what matter, not 6 months or 1-year returns. And we should expect that during the marathon, there will be times that will be tough. That is, events that will rattle investor confidence. But over the long term, these are just noise. Over my time in investment markets, and it's been a while, I've seen all types of episodes that have shaken markets in the short term. Things like the recession Australia had to have in the early 90s, the Asian crisis, the tech wreck, the 9/11 terrorist attack, Brexit, and let's not forget the GFC. All these events resulted in market falls that were painful at the time for investors, but over the long term, you can see historically that the share market has recovered and continued climbing higher. Our investment options have been able to ride out these bumps along the way to deliver strong positive absolute returns over 10 years in line with their risk profile. All options but one are achieving their long-term return objectives over this period. So what have we been doing over the last 12 months? We've been working closely with our experienced asset consultant Jana and some of the world's best and smartest investment managers to manage our way through the extreme market volatility caused by COVID-19. We've been making investment decisions based on comprehensive research and a disciplined investment process. We've also spent a lot of time and effort ensuring we could meet the needs of our members by paying out early release from super requests in a timely manner, while minimising impact on our investment options. The last 12 months has reminded us again just how important it is to have a well-diversified investment portfolio. It's the old "don't put all your eggs in one basket" story. Having a wide range of different types of investments protects us when one or more of them underperforms. The outbreak of COVID-19 in early 2020 caused significant market volatility and has had a huge impact on the global economy. This has resulted in varying outcomes for investments in our portfolio. Some of our investments, such as infrastructure assets like airports and toll roads, and retail property assets such as shopping centres, have really struggled because of the strict lockdown measures that restricted the mobility of the population and led to the temporary shutdown of many retailers. Other assets, such as energy generation and distribution, have been minimally impacted by the pandemic. And others have flourished in these conditions, including industrial property assets like distribution and logistics centres, as they have facilitated the massive boom on online shopping amid the lockdown. To further improve the diversification and resilience of our investment options and to increase their return potential, we have made several changes over the last year. These have included adding Resolution Life, a global insurance-related investment product, to the growth alternatives asset class. Swapping in a product managed by T. Rowe Price in the international shares asset class to better capture investment opportunities in China as it becomes a bigger part of the investable universe. And adding the Ardea Real Outcome Fund to the defensive alternatives asset class to access unique and diversifying sources of returns from global fixed interest. During the year, we have also continued to enhance our approach to responsible investment. We very much believe that environmental, social and governance factors can have a material impact on the long-term investment outcomes for you, our members, and we know you care about this. Therefore, it is important that when we choose investment managers to manage members' assets, that they have a robust process for incorporating these considerations in their investment decisions. This ensures the investments we make via these managers not only deliver strong long-term returns for members, but help protect or improve the welfare of the community and the environment. Some of the investment managers we use are global leaders in this area. To make our approach to this very important topic transparent, in early 2020 we added a dedicated section on our website, including what we hope is an informative video. I'd like to play you a snippet from it now. Responsible investment takes into consideration the impact, both positive and negative, on the natural environment as well as on people and society when making investment decisions. At Club Plus Super, we believe in responsible investment because it helps build a better future for our members and the generations to come. You've been looking at a Club Plus Super investment. It's Alice Springs Airport. It has a large on-site solar installation that generates up to 100% of the airport's daily energy needs. This solar power significantly reduces the carbon emissions and delivers cost savings to increase the long-term value of the airport. Members' funds are also invested in a range of other alternative energy investments, including several wind farms, generating enough clean energy to power millions of Australian homes and save a significant amount in greenhouse gas emissions every year. The Lend-Lease APPF Commercial Fund, a portfolio of 21 Australian office towers, is another Club Plus super investment. In 2019, against 960 other global participants, this fund was ranked first on environmental, social and governance criteria by GRESB. GRESB defines the global standard for sustainability performance in real estate assets. In addition, a number of office towers in this fund have been awarded the highest star energy rating by NABERS, a national rating system that measures the environmental performance of buildings. And then there is our investment in Whyuna Water, which operates a filtration plant that provides clean water to more than 500,000 people in Sydney. This operation is powered completely by a hydroelectric facility that enables it to be entirely energy self-sufficient, exporting renewable energy back to the grid. Hopefully, these examples give you a flavour of just some of the investments we have made and will continue to make on behalf of our members, which will make a real difference to the environment and society. This year, we have further enhanced our approach by undertaking a couple of different activities. Working with our investment managers on modern slavery, monitoring the carbon intensity and footprint of our equity managers, and performing scenario analysis to estimate the potential impact of climate change on our member investment options. We know our members, which includes me because my super is invested with Club Plus Super, care about how their money is invested. So be assured we will continue to have a responsible approach to the way we invest. Hopefully today I've given you good insight into what happened in the financial year ending June 2020, as well as over the last 6 months in investment markets and with our member investment options. If you want to hear my investment outlook for 2021, please watch the December 2020 investment update video, which was included in the latest e-newsletter recently sent to members. The video is also on our website under the News and Insights section. Finally, I know that I have imparted lots of information today, but I want to leave you with 4 key takeaways. 1, we draw on some of the world's best and smartest investment managers to manage your money, and we actively manage the types of investments we invest in based on strong research and a very disciplined investment approach. 2, super is a long-term game. Don't get caught up in all the noise and the short-term gyrations in markets, and remember that markets always recover from seemingly dire events that rattle investor confidence. 3, our diversified member investment options, which includes the MySuper option, are all achieving their 10-year long-term return objectives. And 4, we believe in responsible investment because it helps build a better future for our members and the generations to come.
Many thanks, Gemma. It's so reassuring for our members to receive such a clear outline of the investment challenges, but also the investment opportunities that the fund has taken over the remarkable year that was 2020. For those of you who haven't yet watched Gemma on one of her regular update videos, I recommend them to you. You will find them on the website under News and Insights. They are the fund's most popular video content. That wraps up our pre-recorded session. Thank you for being part of it. We'll now take a break and return shortly. Now it's time to answer your questions. We have the following people available to respond. Directors of Club Plus Super. Along with myself, we have Steve Wan, Jingmin Quinn, John Hawker, Julie Kalewska and Nick Lucinelli. We have our CEO, Stefan Strano. We have our Chief Investment Officer, Gemma Dooley. The fund's auditor, Ernst & Young, is represented by Marie Polisco. And also online today are the other members of the senior management team. Carolyn Tate, Craig O'Loughlin, David Barton and Lindy Hunt. Several reminders. You're still able to ask questions by using the Q&A tab on your screen. We will be answering all questions except if they're of a personal nature. For those questions, one of our member contact team will be getting back to you after the meeting. We won't be filtering any questions, and most importantly, the minutes of this meeting, including any questions, will actually be up on our website within 30 days of this meeting. We haven't received any public forum questions yet. We'll allow some time for live questions. We haven't received any questions, which I can understand. It can be difficult to ask questions in a public and more formal environment. Please note that your questions and inquiries are really important to us. Please feel free to ask them at any time, and our contact centre and our member service managers will get back to you. I hope you'll leave today knowing a bit more about Club Plus Super. If you remember just 3 things, then we will have achieved our goal today. Number 1, you're in a platinum-rated industry super fund. Second, you enjoy strong long-term investment returns, value for money, and an exceptional personal service. And third, it's easy to take us with you wherever you go, whatever your career or whatever stage of life, we can be with you the whole time. We appreciate you taking the time to be with us today.